Hello traders, this is Rich from Tradesight. This is the market preview for Tuesday, July 29th, 2014. With a kind of lackluster day where the broad market was essentially flat more or less, with the Russell and the small caps actually taking a bit of a hit today. They were down about 0.5%, so we had kind of a bifurcated market where the big caps and the dividend and yield producing stocks were better bid for than the growth-oriented small caps. The TLT today took a turn for the worse, and for the bulls that is, and rolled to the downside. Oil was a little bit softer on the day, as was gold. Market internals today were kind of so-so on New York. The market was up, but we were minus 400 issues, which is not great. But on Nasdaq, even though we're up, $4 or $5, 4 or 5 handles, that is, the advanced declines are minus about 750. So internally, kind of a sloppy day for the market after really not really going anywhere and just kind of running in place for a Monday here in the heart of the of summer trade. Here's a look at the ES futures. The ES futures recouped some losses from earlier in the day. You can see the big tail at the bottom there. Ultimately, just wound up closing at the 10 EMA. So net just really pretty much of a neutral day. Still kind of lateral here in the last little bit of trading. There's a pretty decent gap overhead that needs to be addressed from last week, but that really hasn't been on the table as far as strength to come up and close that gap. So for now, that little mini breakdown gap is still open, with the 10 EMA being the current draw. The NQ futures on the day, kind of a similar pattern. That gap is more or less closed versus the settlement from Thursday. So cross that off the list. But again, using the 10 EMA, still a little bit more relative strength than the Nasdaq, even though it was weaker internally than the broad market. The 8 ace level at 4,062 is going to be the level to watch to the upside if we can break out and produce a new high here. Keep in mind though that if we do produce a new high, we've got 9 bars up, then we've got a 1 through 13 exhaustion run, and now we're going to be working on another 9-bar run to the upside. So we're pretty deep in the count here, and if we do complete that this week, it'll be a 9-13-9 in place, which will kind of hold back trade and actually potentially be an inflection point to the downside. Here's a look at the Russell. We don't talk about the Russell every day here, but this has really been a very, very weak link. You can see that this is the second lowest close of this move. We actually closed and settled down below the 200 period moving average again, so this is definitely a cause for concern. The MACD is still below the 0 line, and we are below all the major moving averages. Here's the 200. We're below the 10, obviously, and below the 50. So we're below all the major moving averages, and the 10 period moving average is starting to pick up a bit of a fairly aggressive downward bias. Key support, if we break down below the previous low, which was actually used today right here at about 1132, is going to be 1125, that 4 ace level. If we start to roll down, we're going to have this double top in place, as you can see, and then put this 2 ace level at about 1094 in play. The bonds, I think, are worth talking about right now because we had this little weird gap down day last Thursday, shot up on Friday, a little bit of a safety trade perhaps, but today closed down below the day's open after making a new high on the move. So we made a new high on the move but closed below the day's open. The only thing that this chart really has going for it is we've got plenty of room to run here before we get into a 13 exhaustion situation, and there's plenty of room on the Gann box here before we get up to this 8 ace level. But for now, a little bit of a cause for concern. We've got this gap that's open here that perhaps might need to be addressed to the downside. Oil futures didn't do too much on the day. They were essentially kind of locked around last week's settlement, and we tried to take a shot at the 10 period moving average, but never really penetrated above it with any kind of authority. So for now, still short-term negative here in the crude futures. Gold futures tried to go higher on the day, but ultimately settled a little bit lower. this 10-period moving average is still the big level. 13.1250. If we do pivot to the upside, it's definitely going to come into play on the upside, but we are above the 200 and the 50-period moving average for now. So taking a look at the 10-day trend. The 10-day trend is actually getting a little bit closer to overbought than oversold. The 0.85 area is the overbought threshold, and we're reasonably close to that. And a couple of low prints here in the intraday trend is definitely going to produce that overbought reading for the market. So definitely keep an eye on that. Here's a look at the total put-call ratio. The total put-call ratio is actually moving in a direction towards the overbought area at about 0.55 or so. We're actually fairly close to that, all things considered, because you can get that in 1 day's reading. So if the bulls come out in force on any one of these next couple of days, we could definitely see that recorded and get that inflection warning. So definitely keep that in mind. So if we get around 0.55 or even better 0.5 in the total put call ratio, we're going to be looking for a reversal with some teeth to the downside. Here's a look at our multi-sector daily chart with the important late cycle sectors on it, and they were all pretty much weaker on the day. I think the real takeaway here, though, is the real weakness that we saw in the transports. We do not have a qualified lower high set up here, but we are rolling down from the high water mark. And the oil services, the OSX, was also weak. That's the gray line here. The source of strength here on the chart was the defensive-minded XAU, and you can see the banks were also lower on the day. So today, internally for the real late cycle stuff, not a very good showing by any stretch. All right, so here's a look at the individual sectors. I'm just going to click on the percent change column and rank them from best to worst. You can see there was a pretty defensive-minded day. XAU was near the top of the list, and the utility index was also near the top of the list. BKX was kind of middling, but the laggers were the housing by a pretty decent stretch. The transports were very weak, and oil services were weak. And these are the ones that you want to see continue to perform, and we don't want to see those roll over at this point. All right, here's a look at the housing index, the HGX. You can see that we're starting to get some distance now below the 200-period moving average. So this is really starting to feel the effects of this recent rollover, lower high in place. The 0 ace line at 193 3/4 should probably come into play. I would be surprised for this to roll over and lose this initially without gaming that level a little bit. We did have housing data in the form of pending home sales this last session. Then tomorrow we're going to get the Case-Shiller number, so that definitely should have some effect on this right in here. So expect for this 193 3/4 area to come into play. Transports were also very weak today, rolling down below the 10-period moving average. Note that this 13 exhaustion is still in place, and the risk line has not been broken on the closing basis and qualified. So this is still in play, and this static trend line coming in about 82.14 is going to be the area to watch. Oil services is also important here. We came into use the 50-period moving average today. That area usually will get gamed for a day or two, so be careful with there. The MACD is also approaching the 0 line, which is sometimes a stubborn area, so be aware of that. So expect that this area in here gets gamed a little bit. But the key technical development, though, is that we did come down to play with this area, and we did make a new low on this move to get there. BTK didn't do too much today. It's still in this lateral area and not able to take out this 8 ace level at 28.12. So this is going to be a kind of an anchor on the Nasdaq side of the market until this thing starts to straighten itself out. This point in the cycle, that's kind of a tall order, so I'd actually expect this to reach 6 ace and probably even 4 ace before we produce a new high in this particular sector. Utility index was the top gun on the day, kind of defensive minded, right up into this 8 ace area. So really nothing to be learned here. Still holding above this 0 line in the MACD, finding support there. XAU is also pretty strong today, with getting back above the 4 ace level at this 100 level. We still have this 13 exhaustion in place, so we're going to feel the effects of that, and especially if we get back up to play with the risk level here that comes in at about the 104 area. So if we do break out above last week's high, this 104 area is going to be kind of a stealth area of resistance, so keep that in mind. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.